Hey, Bulls and Bears. Well, it looks like the automobile price bubble has popped as millions of vehicle owners are now underwater on their loans. We're going to get into that and more. First, please make sure you like and subscribe this video. Get us a little bit of traction so people can see what's really happening and give people economic reality here. Let's go ahead and get started right here. This is out of Automotive Blog. And the headline here is Negative Equity Surges. Millions of Americans now underwater on auto loans. Folks, this should be no surprise to anyone watching this video. We saw prices explode after the health crisis came out in 2020. We saw part shortages, specifically shortages of chips and causing manufacturing delays. Of course, all the shutdowns came along with that. All the stimulus money, the money flooded into the economy, the helicopter money, the rock bottom interest rates, you name it. It was a perfect storm creating exploding prices to the upside. Well, now the opposite is happening, and a lot of these vehicles are worth a lot less than they were paid for. Remember, people were rolling tax, title, a lot of different things into their automobile loans, smog fees, things like that, especially here in California. So a lot of people underwater. This is not looking good for people here. Well, let's take a look at a kind of a frightening statistic here, in my opinion. Folks, look at all the people that have this pretty scary car payment, in my opinion here. The share of Americans spending more than $1,000 per month on their vehicle payments continued to increase steadily in the third quarter. Just wait till the fourth quarter number comes out. It's going to be really frightening. This one's frightening enough here. So we have, let's see here, those higher financing costs means that 17.5% now pay more than $1,000 a month on their car note. That's up from 17.1% the previous quarter. So things are continuing to get worse. When's it going to start getting better? Every episode I say, am I repeating myself? Well, I have to repeat myself because things continue to get worse. These people are underwater in their car loans. A big percentage of people have these $1,000 a month car payments. And guess what? Next quarter is probably going to get worse unless the banks stop loaning out money. That's the only thing that's going to stop this, right? So when you have too big to fail mega banks, always guaranteed bailouts, then you're going to have these price bubbles that seem like they never end. But even with that, we still have some prices coming down. So we're seeing deflation in automobiles. We see it now in real estate. We see other areas where prices are coming down. Consumer goods and products are coming down a bit. And I kind of have to scratch my head a little bit and ask, what were these people thinking that got into these car loans that are $1,000+ a month? Did people think that prices were never going to come down? Or did they underestimate the cost of owning a vehicle too? Because you have, look at these headlines right here. Shocked by spike in car insurance rates, 9 ways to save money. CNN, car insurance rates just took their biggest jump in 47 years. Folks, the cost of labor is making these car insurance companies have to raise their rates because they have to pay all their employees, the claims adjusters, the customer service representatives. That's just part of it, though. But think about this. The cost of living, the demand for higher wages, we see strikes happening all over the place. There's a new strike, it seems like, every week because the cost of living is just too high. Insurance companies are feeling the same thing, and higher repair costs and more accidents. Think of all the technology in these cars now with the sensors, the brake warnings, the side, the rear cameras, all the different technologies. Every time there's an accident, those parts cost a lot more, and therefore the labor costs a lot more. And the automobile technicians have to be basically electronic technicians now because you have so many electronics now in these vehicles. It's more than just being a mechanic and working on engines. You have body shop, basically personnel there are technicians that have to know all these electronic repair methods. And here's a headline that talks about just that from the Post here. Auto insurers blame rising rates on newer car repair costs. So folks, a lot of people were not ready for what they're seeing right now. Also, a lot of people believed what they were told. They were told what? That inflation was transitory, that the cost of living was going to come down. But they didn't realize the very tricky wording that was used. Words like, oh, inflation is slowing. That just means prices are going up, but just not as fast. So prices coming down, no. Cost of living still elevated, and these people in these big expensive car loans, $1,000 plus a month. Imagine 17% of all vehicles right now getting repossessed. If you look at all the people that have $1,000 plus a month car note, that could be something that really could happen. And we're going to see it play out here in the next few months. How bad is it going to get? Well, are you buying a car today or are you waiting? Time will tell, but we'll certainly be here to stay on top of it and report the latest updates for you. But hey, it's November 24th. Happy Black Friday to everybody. Happy holidays if you celebrate the holidays. Otherwise, just happy Friday to you. Maybe you're shopping as I'm playing this. Maybe you're listening to this on your portable device, on your phone, and you're shopping right now. Also, it was recently reported that the average car payment hit another record high. Let's go ahead and take a look here down into this article here. This is out of money.com here. And what do we see here? The average auto loan interest rate for new vehicles was 7.4% in the third quarter, the highest since 2007, right before the financial crisis. As a result, the average new car payment in the third quarter was $736 a month. Wow. Which is $33 higher than a level from a year ago, which was $703 back then. All right, so this bubble is seemingly continuing to expand. But what we haven't seen yet into these numbers here is the recent deflation that we've seen. We've got a lot of people underwater on their car loans now. So it's going to be reported pretty soon that the average car payment is going to come down because people that are buying these cars going down the road here in the next few months are going to be slightly lower cost. Oh, and also real quick on that topic, in our previous video, we talked about the likelihood of rates continuing to rise from here. It's very unlikely if you look at history. It's 5 or less times, as far back as I can find, that after a pause in rates, that the central bankers continue to raise rates after that. So it's very likely that they're going to cut rates. In fact, the last video estimated that March would be about the average, because the average time frame between the last rate hike and the rate cuts that always ensue is about 8 months. So from the last rate hike, the pause that we're seeing right now, 8 months is going to take us into March of next year. That could very likely be when they start cutting rates. Unless something else big drops or breaks before then, I think we're likely going to see rate cuts in the next few months as the economy continues to deteriorate, as more people get behind on their loans. As we talked about at the beginning of this video, more people behind on their car loans now. You're going to see everything else follow. House payments, utility bills, people are going to start getting shutoffs again. The consumer's in pretty rough shape, folks, so we're going to stay on top of it here for you. Hope everyone is well. Hope you're bracing for this economic tsunami that is hitting right now. It's not coming. It's here. You just have to look at the news. And you may be saying, no, this is drama. Everything's fine. Well, maybe everything is fine to you, and that's a good thing. And maybe it's fine to you because you expected this. You're on top of the news. You knew this was coming. So now you and I, and hopefully everyone watching this, is in a good position. But if you look around, most people aren't. So we may be the very small fraction of the population that's actually bracing for what's here, and therefore we'll be just fine, getting through this, right? So that's the whole point of this channel, is to try to keep everybody on top of things and get ready for what's coming. So we'll be ahead of the curve. And all right, so we're going to wrap this one up, folks. Everybody keep stacking. Happy holidays. Hope you're having a great Black Friday and upcoming Thanksgiving weekend, full of shopping, full of relaxing, maybe just hanging out with family, whatever it is. Hope you're having fun. Please let me know down in the comments what you're up to. Thanks, everybody, for watching. Peace.